Welcome to Brewed in Monmouth, the real estate tea with Kate and Doreen. We're here to talk homes, hometown gems, and real conversations with the entrepreneurs and locals who keep Monmouth County buzzing. I'm Kate, and as always,
I'm Doreen. Each week, we're bringing you the voices behind the businesses, the stories behind the sales, and the tea you need to hear. So grab your favorite drink and let's get into it.
welcome to another episode of Brewed in Monmouth, the real estate tea with Kate and Doreen. We're so lucky to have Lee Bacha here with us today from loanDepot, Fairhaven's own Lee Bacha.
Thanks for having me, Kate.
Really great to have you on. So how was your new year?
It was great. It
Yeah.
was a nice little break, not too much activity between Christmas and New Year's, right?
Yeah, we're a little bit rusty here. We took a little hiatus, but we're back and we're ready to get after it.
I think a break is nice. Everybody needs a little time off, kind of sit with the family, just relax a little bit, and then jump right back into
Sit
it
with
in
the family
January.
or go to Costa Rica if you're Kate.
Yeah.
Yes.
It was
That
great.
was really nice.
It was very nice. So we have some mortgage news, I guess, that you could fill us in on.
Yeah. So
A lot of this is Greek to people, even in the industry, sadly.
Right.
So
Right.
It'd be great to have an explanation.
Well, it's funny because we always tell people that if you want to know where rates are going, you can pull up the U.S. Treasury 10-year on CNBC, and that's basically where rates go. If the 10-year is moving up, the yield on the 10-year is moving higher, so are mortgage rates. But this week, or last week, it was announced that the Fed or Fannie Mae may be directed to buy $200 billion worth of mortgage-backed securities. And so the reason we tell people to watch the 10-year is because the mortgage-backed securities follow the 10-year. But in this instance, there's new buyers of mortgage-backed securities that aren't normally there, right? Because they're being directed to buy $200 billion, or maybe they won't. That was just the headline, right? So as soon as that headline hit, all the traders out there went out and purchased MBS bonds because they're getting ahead of it. So what that did was it tightened the spread. Normally, mortgage rates are the 10-year plus a certain number, right? Mm-hmm. So that's the spread between the 10-year and the actual mortgage rate. But now, because the MBS bonds moved, even though the treasuries didn't, rates dipped. Bottom line is rates dipped a little bit because of that. So
Enough to get buyers a little excited.
yeah, maybe an eighth or a quarter, something like that. So we saw them break 6% for conventional, which is great.
Which was the first time in how many years, right?
I mean, they're really about 3-year lows right now.
So what is the logic behind buying those mortgage-backed securities? It just is to make a temporary dip in rates, or how sustainable is it?
I think they're just trying to think of any way to lower rates.
For
And that's
affordability.
what the administration wants, right?
Okay.
So they want affordability, they want more activity, and I guess that's one way to do it. So cutting the funds rate doesn't necessarily move mortgage rates right away.
We're hoping it moves people out of their house, like gives them a reason to sell and buy something else. The
There's
ones
no
that
inventory.
are sitting with the 3%
Right.
or whatever. I forget what you probably remember. I think it's like 60% of the country is sitting with 5% or less of a mortgage, right? It's
Yeah,
like a very high number.
Right. And I do think it's getting to the point where, people can't just hold these low rates forever, right? You get married, you have kids, you have another kid, you have another kid.
Right.
Somebody gets divorced, you can't sit on these low rates forever, right? There's life events that are coming through, and people are going to have to start selling and moving on to something else.
We haven't seen it yet, though. I mean, we are starving for things to sell. There's just nothing.
Inventory is super, super tight. I mean, it's great for the sellers, but it's really hard for the buyers.
Right.
And it's really only great for the sellers if they have some place to go.
Yeah.
It's hard for them to want to sell, but then not be able to buy something because it's so competitive out there.
And one thing that stops more inventory, if you let's say you have a 2 7/8 rate and you are going to buy a place because you have to, you might end up selling or keeping your place and renting it out. So there's one less house that's being listed, or condo being probably more likely in a condo scenario. But
yeah, it's also kind of like a net zero though, because if one person's moving but they're buying another house, you know what I'm saying? It's not really more inventory. It's just kind of like moving it around a little bit.
right. But we're okay with moving around, right?
Yeah.
Yeah.
I'll take anything at this point for sure. Anything. Not too much though. Just enough.
But speaking of affordability, I bought my house in 2018. I see what my clients are now spending on a mortgage compared to what I spend every month, and it's really crazy how young families are doing this. Is there any other kind of programs on the horizon? What do you think of the 50-year mortgage that was in the news?
So I think that's almost a little bit of a gimmick. That's
Yeah.
kind of, to me, that's the same as having an interest only, right? Because you're not making a dent in any of your mortgage. So
You're not building any wealth, really,
that's
or
right.
equity.
And I mean, I suppose it's an option, and any option's better than less options, right? But if you could just have a, an interest only loan. It's almost the same thing, right? So I don't see that as any kind of a game changer.
Do you think the portable mortgage is a good idea? Do you think that'll come to be?
I don't think that'll ever happen because, when banks give you a loan, they're basing it on you at that time with your current job at that house and all these things, right? And there's a lot of variables that are coming into play to get you a specific rate. So for you to leave 5 years down the road, they're probably going to want to make sure that you're still working, that you still have that job, and that what's the new place worth? And I don't know. I don't see that. I mean, it would be great for people who have low rates, but I don't see it happening necessarily.
Right.
So what is a portable loan? So basically you just take the paper on the first house and put it towards the second house, like roll it over?
The rate. I believe that's what it is. You're the expert,
I mean,
but it's just taking the rate. So if you're sitting with 3%, you could take your 3%, pay off this house, and use the 3% to buy a new house.
Right.
What's in it for the banks? It's kind of...
Well, that's what they're saying. The bank's not going to make any money.
No.
Yeah, the bank would never let that happen.
No.
Right. That's
No.
exactly it. What's in it for them?
Yeah.
Nothing.
Yeah.
Right. Same thing with the assumables, which I think the assumable is a little bit more risky because if Kate, no offense, but let's say Kate was to assume my mortgage, her lifestyle might be different than mine, right? So if the bank was okay with me having this mortgage, they may or may not like Kate's credit and everything else too.
That's exactly
so that's
right,
much more risky for someone else to do an assumable mortgage.
I've become much more risky. 7 years ago, I had a W-2 job and going up every year. Now I'm 1099 all the way. So, people's lives do change.
Yeah. So it is risky for the banks.
Yeah.
I don't know what the answer is. There's just so many more people living in this country today. There's just so much that I don't know what to do.
It's very interesting. I read in the paper that Pulte of Pulte Homes, he was the architect of the 50-year mortgage. He's the one that wanted the administration to push it.
Pushing a lot of these things.
Which is crazy to me because
I know.
it's we could cut the prices. I mean, you're the biggest home builder in America.
Right.
I know, but it comes down to the workforce. It comes down to the lumber. It comes down to so many.
Oh, yeah.
So
So
many
Lawrence
other
Yun,
things.
the NAR economist, right? He's predicting a 14% rise in activity this year. I think he said that just came out. That would be nice. I mean,
That would be really, really nice, but
Yeah,
I don't
we're
know
at-
where all the houses are coming from.
At least in this market. Because when you look further out, I met some colleagues in California, and it's so much easier for them because they have an HOA, and they just kind of farm that HOA. And it's just, there's a lot more inventory in houses in more populated areas. Like for where we are in this little, at least where I am in the peninsula, just 80 houses sell in Fairhaven a year, 120 in Rumson, and that's it. And then you just got to scrounge to try to get that inventory.
Yeah. And there's no extra land to build.
Nothing.
It's not like new, and nothing new is really coming
No,
out.
no.
No, they have to create bigger, different metropolises. They have to have companies starting in different areas, probably more like middle America, where there is a lot of land, but they need to build the infrastructure, the companies, the stores, and the restaurants and everything there to get people to want to move there and work there.
Right.
And that's a much bigger
That
project.
can't really happen in New Jersey, I guess.
No, it can't happen in New Jersey. We have
But for the
very
state of
little
New
land.
Jersey, do we have any kind of aid for first-time buyers?
Yeah, absolutely. I mean, there's for a first-time home buyer, you can get up to $15,000. You have to meet certain income limits, and you have to be the first-time buyer. If you're a first-generation home buyer, you can get an additional $7,000. So if nobody if your parents or your grandparents, if nobody ever bought, I don't know how they prove that.
Wow.
But you have to sign a paper saying that that's the case. You can get an additional $7,000. So you could get $21,000 as a down payment assistance
For being a lifer,
from New
a
Jersey.
rental lifer.
Yeah.
For being a first generation home buyer.
Home buyer.
And aren't you
first-time
considered a
homebuyer.
first-time home buyer every 7 years or something? Don't you get if you have a divorce or something?
Yeah,
And
it's 3 years. If
3
you,
years.
If you haven't owned at all in
Okay.
3 years. So
then your first time again.
then your first time again. So there's pros and cons of these
Oh, wait a
programs.
minute. So meaning if I owned a house and then I moved to the city or whatever and I rented for
if you're
5
renting
years,
for then you
3 years or
you
more, then I
could
could come back
Yep.
and buy as a first-time home buyer
Mm-hmm.
again.
Yep.
Oh, I didn't know that. That's interesting.
Yeah, and so even without the down payment assistance, there are benefits to being a first-time home buyer as far as pricing goes, because if you make under 100, well, it depends on where in New Jersey, but it could be $149,000 in certain areas. If you make under that number and you're a first-time home buyer, we'll give you a rate as if you're putting 25% down and you have a 780 credit score.
Oh, wow.
Yeah, so that's a big break for people.
It is.
Because if you have, a 690 credit score, you can still qualify for conventional, but your rate might be 3/4, 7/8 of a point higher. But if you have this, it could drop it all the way down.
Yeah.
That's another interesting one, the credit repair. Do you offer that?
I have ways to give advice on how to improve your credit quickly. So the credit companies stop shopping. If you can get the ratio of your credit cards down to 30%, that's what they look for.
Okay.
So
30% of your balance of what you...
Of the max.
The max.
Yeah, the max credit limit. So one way to get there quickly is to call your credit card and say you want to raise your max limit. And they'll do it. Just say, don't run my credit, but you can do that now, and you can make that call right away. And it's instant.
And how many points does your credit go up for that?
So it's not like an exact science, but it can move the needle.
Yeah.
Definitely. Yeah. And the other thing is I tell people to sign up for Experian Boost. I don't know if you ever heard of that, but there's 3 major credit bureaus. There's Equifax, TransUnion, and Experian. And Experian Boost has something that you can add anything you're paying already, your cell phone bill, your water bill, your heat bill, things like that, and they'll add it to your credit profile. So if the reason your credit's low is because maybe you don't have a huge amount of credit history, maybe you're younger, or some people call and they say, oh, my credit's going to be amazing. I've never even had a credit card. You're like, no, that's wrong. It's going to be the opposite of that. And so you need to build your credit a little bit, and you don't want late fees and really high credit or credit balances, but you need to have some kind of a credit history.
Right.
So Experian Boost does help you do that, which
oh, wow. Okay.
Because
even if you're renting, you still have your utility bills and stuff like that you can put in there. Okay.
You can do your cable bill and your cell phone and all those kinds of things.
I think Mom's still paying most of the cell phone bills, though, for these.
That's definitely true.
It is, right? It never goes away. It's cheaper.
But I had someone who came in and they had like a 705 credit score. And, I tell people when you get pre-approved early, that's one of the big benefits, because we can do a soft check and then I can look at the details of your credit and say, if you just do this, this, and this, you might be able to raise your credit. And I had someone go from 705 to like 742 in like 3 or 4 months.
Oh, wow. Yeah,
that's a huge difference. And so a lot of jumbo programs won't even lend to you if you're under 720.
Yeah.
So just getting from, 705 to over 720 could get you into, being eligible to get some of these jumbo ARM products that are, half point cheaper than, or maybe more.
And like you said, doing it early is very, very helpful. I mean, we pick up the phone sometimes. It's like, hi, this is so-and-so. You refer to me, whatever. We just saw this house. We want to go look at it, right? We were talking last night. We're ready to move. Do you have a pre-approval? No. They haven't even done that. Like, you can't start looking at houses without having a pre-approval first.
Yeah.
You don't even know what your buying power is.
That's step one for sure.
So people should first make the first phone call, maybe to their agent, and say, hey, listen, I'm thinking of getting pre-approved. Besides my local bank, who else do you recommend? And make that jump first.
And everybody always thinks they make more than they do, and they think that their credit is higher than it is. I mean, you ask anybody who's applying, oh, my credit's, it's like 860. I'm like, well, you can't even get to 860. What are you talking about?
Yeah.
And so, so it is. It's important to run it and run the soft check so that it doesn't hurt you. But then you know what you're working with. And and if you're at 690 and you really want to have a jumbo loan, you need to get up to 720. So you need to work on that.
Right. Or even if they could go see that house.
Yeah, before you and you take them to see a house that they can't afford because right?
Yeah. I learned that the hard way when I first started. I was like, no.
It's hard.
Yeah. It is. Because you want to respect people and they really want to see something, but at the same time, it's kind of frustrating for them to see something they can't buy anyway.
That's right. Nope.
So.
And then it just sets the bar, and then everything else that they're looking at under that price point is going to pale in comparison.
Right.
It's hard.
And it wastes a lot of people's time. Yeah. And the other thing about getting things done early is, especially if you're self-employed, like I said, a lot of people think they make more than they do, right? But now we're coming up with more and more QM, non-QM programs. So basically, for self-employed, we have There's a bank statement loan, which means we can just look at the past 12 months of your bank statements.
Okay,
and,
1 year look back.
Yeah, and so we use basically half of whatever number that is, and use that as your income. And you can if you have a CPA letter saying that your expense ratio is lower, we can use even more than that. So that's a good one. There's a P&L loan now, so they're just looking at your P&L from the year before, and again, that has to come from an accountant. There's a lot of new programs coming out. They're really pushing non-QM.
What's the pricing like on that?
It's not as bad as you'd think. It's probably a half point higher.
That's not that bad.
So, upper sixes maybe. Some are lower though. I mean, every now and then you'll see one and you'd be kind of surprised. If you're putting down a certain amount, it changes it. If your credit score is higher, it changes it. But yeah, there's a lot of these non-QM programs.
And QM stands for?
Well, the quality mortgage. And then the other thing is for investors, DSCR loans, which is the debt service ratio, that's become a really big one lately. We didn't used to have one for ourselves. We used to have to broker that out. So now it's all in-house, and a lot more lenders have these programs in-house. And
one thing I'll give you at loanDepot is you guys get the clear to close with like 10 days to go. It's amazing. It's a beautiful thing.
Feels nice to get that early.
Oh my God, it really does. It really does.
So what would be the benefit, Brad, for someone to come to you?
Lee.
Brad's,
so sorry.
Brad's
Edit that.
Let's plug Brad.
Yeah.
Brad's a great attorney.
If you need
and
a
I
real
just
estate
confuse
attorney,
them.
Brad Batcha's in Shrewsbury. But you need a lender.
Sorry.
Some
Lee.
background on Lee. Lee is one of 8 children, and his brother Brad is a prolific real estate attorney in the area too. So
That's right. Right around the corner from where we're filming right now.
If people were to come to you versus going to their bank, they have all their money at TD or Merrill or whatever it might be. What's the advantage of coming to somebody like you?
Right. So all we do are mortgages. So we're very specific there, and we're we know what we're doing with mortgages. Banks have a lot of different products, and there's a lot of layers there, right? So sometimes we find that banks take twice as long as we could to get something done, right? I even tried to get a loan myself before I started doing this with a large bank where I keep my money. I won't say the name of the bank, but the amount of things they ask for, there are just so many levels because the first person asks and then they have to ask somebody else, then they ask somebody else, and a week goes by, and then the underwriter comes back and changes the story. And for us, we're trained more to know exactly what we're looking for right away. So if I ask you for 5 things that I think I need and you send it to me, I'll look at it right away and I'll say, that looks good, this looks good, this looks good, but this isn't what we're looking for. We need the other thing before I even get it to the next level. So I think we're much faster.
Faster, efficient, thorough, as opposed to just easy.
Yeah, and we have more lenient programs as well. So
more options.
We have the ones that are stringent and that are going to have good rates, but if something goes wrong, we have backup plans. So
backup plans are good.
Backup plans are
We'd
always
always
good.
use a backup plan.
Yeah.
So
we try to think of everything ahead of time, which is why we always try to get people to get pre-approved ahead of time. And sometimes you have to tell people you can't afford that. But if they know that ahead of time, you don't want to know that 2 weeks before the closing.
I've had that happen before too.
Because it does happen, right?
Yeah.
It's hard.
You have to try a lot of people on before you find the right fit.
We tell people sometimes, if you were going to get heart surgery, would you go to the guy who does elbows and wrists and knees, and he also does heart surgery, or do you want to go to the specialist who only does heart surgery?
So how often do you have somebody buy a Corvette before closing?
Yeah,
celebrate.
Right, I know. Don't buy anything before.
People really sometimes think you're kidding, but I'm like, please do not buy the furniture.
Don't
just
buy
wait.
the furniture.
Like your debt to income ratios can all go off, and it does happen.
On those tight ones, I always tell people, and sometimes you have to tell them even, you can only spend $120 a month on insurance for now. If you want to get more insurance later, go for it. But it's that tight. But it's good to know that ahead of time. Once we know your credit and we know exactly what the taxes are and we know exactly what your rate is, nothing can really change from there. So you just have to make sure don't add anything.
Stay in line.
Right? Yeah, stay in line. Right.
Because they're saying the foreclosures are very, very low. They're nowhere where that, like, even if they nudge up a little bit and it makes, national headlines, they're so low compared to where they were, back in the early 2000s.
We're starting to see an increased rate on delinquencies in auto loans. and in credit cards, but not in mortgages right now. And that's probably because, I mean, values have gone up and up and up. And so, you know, when you hear people saying there could be a real estate crash, like 30%, how could that be, right? When everybody has all this equity in their homes, even if you're forced to sell, you still have some equity there. It's not,
not underwater.
People aren't underwater right now.
You'd have to go down about 60%. It'd have to be a massive crash. I mean, worse than 2008.
Well, what's going to cause that? We have low inventory.
That would be the only thing.
Prices.
If everybody decided to wake up tomorrow and put their house on the market, that would be the only thing that would crash. And why would people do that? Where are they going? Right, no one's leaving in mass.
Unless there's like a black swan event.
Yeah, no. You know, and anything like that. Nothing like that.
When do you guys expect the spring market to start? I know last year it seemed like it was an early spring market.
I think it's going to be late this year.
I think it's going to be late this year?
Okay. I do. I think it's just, it's cold. It's been cold. The weather's been kind of crappy.
Yeah.
And people, they want to wait.
It's kind of nice today. Oh, no, it wasn't. It was a little windy.
No. Yeah. What do you think?
I don't really know if we're going to see that high spring market anymore. I kind of think that it's kind of like an all year round market. I think that, you know, the people who listed in the fall and the winter, there was so many buyers out there looking. Those people really, the ones who were selling, sold their houses really, really fast, sometimes for record-breaking numbers. I don't really see like a lot of competition coming on second quarter, third quarter like it used to be in the past.
And you're still seeing kind of bidding wars when it's priced right.
When it's priced right.
Yeah.
Yeah.
In the sought-after towns. Yeah.
Sure. I think the prepping really matters more than ever. Like, you can't just throw it up there.
Right.
Because the buyers don't want to waste their time coming down because they've been discouraged. They've been through the mill, and they don't want to go look at a house that they're ultimately not going to get. So it has to really attract them, and you have to spend some time and money doing that.
Right.
So you need an agent who's going to do that for you.
Right.
Yeah.
Staging is really important. Knowing the right price to put it out at is really important. It's very strategic. It's not as simple as people think that it might be.
No, definitely not. And you need someone who knows that town.
Right.
You know?
Knows that town, knows that area for sure.
Right.
So I don't know what's going to happen with the market. I mean, nobody has that crystal ball, but I think it'll be a nice, hopefully just a nice balance throughout the whole year, not a major rush. I would like that. Better for, you know.
I don't know. April and May is pretty crazy.
It could be really crazy.
Yeah.
But sometimes September is crazy.
I think it goes like March, April, May, and then June it slows down again. August is pretty quiet, and then September, October it happens again, and then it falls off.
Yeah. People settling in the summer. I don't know. We'll see.
Yeah.
I just want some inventory. We just need some inventory. We have plenty of buyers. Yeah. Super excited for them, but we need some inventory.
Right.
And, you know, sometimes buyers need to be a little forgiving, too, and say, okay, you know what? Oh, my Lord. So sorry. This is really being edited. You know, something like sometimes it's more like a 75-25. It might not be that 80-20, the house is perfect and this is what we need to do. Sometimes they have to be a little bit more, okay, you know, willing to accept something just to get the house in the right location.
Yeah, and put a little work into it.
Yeah, more than maybe they wanted to.
Do you see, because you work with many different agents, do you see buyers that are more willing to do work now?
Definitely, yeah.
Yeah.
It's funny, I have one guy who's looking, he's looking a little bit north of here, but he's come to me with something that's perfect, and then the next week, I mean, I wouldn't ever walk in the basement, or I think I'd have nightmares. I saw the pictures of the place.
Yeah.
But he was like, whatever it takes. I mean, it's really hard to find the right area if you're on the right street, kind of, right? If it's the street you really want, maybe it's the town you grew up in and you know a certain street, or it was recommended highly by one of you guys because, you know, you could ride your bike to a certain school, or you can cut through this way and get to a park. People are doing whatever it takes, I think, to...
Right, because it's what you just said is so important. The address is really the one thing that's not going to change. You can knock the whole house down, keep a wall, keep the front door, keep whatever it takes, and build, you know, the way that you want it to be. Add a second floor, push out the back. There's so many things you could do to the house itself.
Yeah, I think that's kind of step one, figuring out what town you prefer, right? Do you want to be able to walk into town? Do you want a bigger property? So, I mean, we have that in different, right, between like Middletown and Little Silver.
Yeah, that's the beauty about
Fairhaven,
Monmouth
Rumson,
County.
things like that.
There's so many different
Yeah.
differences between the different towns that it's hard to compare.
You're not going to get a 2-acre with a brand new house in this town,
Right.
but you could over there.
Over
But
there.
in that town, you can't walk to school. But
Right.
maybe it's whatever people want, right?
Right.
So
Closer to the highways,
say
closer
that
to shopping.
I definitely think that's step one. And then, if you have to work on a house, you have to work on the house, right?
I agree.
I love construction. I'm always working on my house. It'll never be over.
Because it's nice to make it your own, though. You could fall in love with something, but it's nice to make the changes to make it be your own, to fit your family. Makes it more unique and special when you can do that. But you have to have the money to be able to do that, too.
True.
Right.
Which is one of the big benefits of owning versus just renting, right? You get to put your stamp on it.
Right.
Do you see a big influx of people coming from the urban areas?
Yeah,
Yeah, me too.
definitely. Yeah.
Might get a little crazier too. I don't know. We'll see. Some of the things, headlines out of New York, I don't think we've seen that yet.
Right. That's true. Yeah. People could be running for New Jersey.
I just really wonder what it will take some people to sell their house, like to actually get on the market.
Back to that just make me move number.
Mm-hmm. I think we're seeing them.
I do too. It's where are they going? Are they going out of town? Do they have a second home that they can go sit in until they figure out where they want to go? That's the hardest part.
Yeah.
That's the hardest part. Where are those people going?
And to your point about April being crazy, or, March, April, May, people get this idea. People who live in New York or live in North Jersey, they want to come down here. They want to be here for
The summer.
for the beach.
Oh, yeah.
They want to be here for June 1st.
Mm-hmm.
Do you think there's going to be this 30% increase from Netflix that people have been floating around on social media?
30%.
From here?
Doesn't really seem possible.
If you really do the math, 1,500 jobs, it's 1,500 families.
Spread out over how many towns?
I just don't see it.
I don't see it either.
Maybe a bump.
Right. It's not that many people.
No, not really.
It's a big name, and everybody likes to talk about Netflix because, Stranger Things.
Yeah. It's going to be like transient workers, though, people who come for the debt. Yeah, I don't know. I don't know if it's going to be people who are settling here. We'll see what happens.
It's not like everyone at Netflix makes $2 million a year, too.
No.
Like you said, there's good people that come and go to work for Netflix.
Yeah.
Right?
A lot of it is gig workers, right?
Right. So it's good for the bagel stores. It's good for the supermarkets or whatever.
Dry cleaner.
I think everybody will pick up a little bit when things are happening. Will those 12 stages be, in use every single day for the next 30 years? I don't know.
And as far as like the super high-end luxury, I feel like that's going to be maybe anecdotal. Somebody bought somebody's house, right? But it's not like there's this huge 500 buyers of,
multi-million
dollar homes.
No, because some of those people might be staying in the city and then, taking the boat over or being, chauffeured in or something. They work crazy hours, so it's not getting caught in the 9 to 5 traffic. And if somebody's driving you in and out, it's easy.
Yeah.
A little bit more private.
Right.
But only time will tell. Everybody's making all their predictions, but nobody has the crystal ball, so no one really knows for sure.
Right.
The top homes in Rumson, the numbers that they're getting now, 11, 15.
Square foot. I know.
I never thought I would see it. So can it go higher? And even being a professional and being in it day in, day out, these numbers, I truly get sticker shock.
I just wanted to stick around until I'm ready to sell.
Yeah, no.
It's not anytime soon. So
no,
not for you either.
No, I'm stuck there for a while.
But it's everywhere. It's, the numbers in Middletown, the home numbers in Homedale. The prices per square foot with things we never would have thought we'd be near.
Right.
Over 5, like you just said, 11, 1,200 down on the peninsula. They're like, the old California numbers.
Yeah.
Yeah, and you wonder where people get these down payments. You know? I see a lot of it as gift funds coming from parents. Yeah. Honestly.
Well, that's what they say too, that the inheritance is the biggest transfer of wealth based on inheritance.
Yeah. It's coming.
Mm-hmm.
It's very common for people to get, I'm going to get a gift for $200,000 from my parents. I'm like, oh, okay, great.
I didn't get that.
They're also a very, very educated generation. They work really, really hard. They have great, not everybody, but a lot of them, have really great paying jobs. I don't know. And you have dual income.
Yeah. No, that's big.
That's a big,
Definitely
game
important.
changer too.
Yeah.
So it's really interesting what's happening. I think the gray tsunami, that's much slower than I think people thought was going to be. And that'll be just years and years of people selling their family homes and kind of retiring somewhere. But it'll be helpful for sure.
Right.
Mm-hmm.
And then the transfer of wealth based on inheritance.
Because houses are a lot of work.
helpful.
I mean, they're great and I love them, but they're a lot of work. And when you get a certain age, it is tough to stick with it and keep up
For
with
sure.
it.
It is, but how many people do you know that you've talked to who would love to downsize, but then they're like, "Oh, I'm going to pay the same amount."
Oh, I just sat down with my dad actually,
An HOA.
and
Okay.
and we looked at it and I was like, "You're not going to pull that much money out. I mean, you are.
Right.
He's going to, but it's not like when you're looking at less square footage, the delta is like really not that attractive."
Right.
So
We're working on one right now where someone's downsizing.
yeah.
And it's hard for them. And that kind of stops a lot of people. It's more of a lateral move. They're paying more. They're not really getting less or more space. They're not really getting the relief from where it makes sense financially for what they have to do in the house
Right.
Yeah.
to maintain the
You're
house.
right. It's not some kind of huge windfall where you're like, "Oh, I'm going to move to this other town and buy a smaller
Right.
place." It's
Or
not-
like it doesn't even pay for me to rent for a year because there's my profit, right?
Yeah.
Until I figure out where I want to go, whether it's here, Florida, or Nevada, wherever they
Right.
want to go.
there is some talk, and I don't know what's going through or not, but right now, if you sell your place, you get a $500,000 tax shield for a married couple, and they're talking about increasing it. I don't know. I saw one that they want to double it, which
That would be
makes
huge.
sense. I mean, they came up with this number 25 years ago,
Long time, yeah.
and it hasn't increased once. I
Right.
mean, I wouldn't be surprised to see that double, and that would probably help a lot, right?
If you're a widow or widower, do you get your
I think
deceased spouse's exemption?
I think it steps. I think their part steps up,
Okay.
but
Oh, that's right. Okay. Their cost basis would
when
step up to
your next guest is an accountant, ask him that
Yeah.
to be sure.
Got it. Got it. Well, any
Yeah, that
other
would
tips for us? I
definitely
think
be helpful.
we're about mortgaged out.
Yeah, no, that's fine. Sure.
But the great takeaway would be find a mortgage broker, talk to them before you even start looking at a house, right?
Yeah, absolutely. And so one other quick tip, I guess,
Yeah.
because we're talking about credit. If you have bad credit, but you're still able to get a conventional loan, the 15-year fixed is kind of the secret weapon there, because the 15-year fixed doesn't care about your credit score.
Oh, wow.
As long as you qualify, if you have a minimum score to get a conventional loan, then the rate's going to be the same whether you have 800 credit or 650 credit.
Oh, that's interesting.
So that can be a huge difference. So if you have 660 credit and you're getting approved, but your rate might be 7% almost because your credit's so low, the 15-year fix could be 5.25 or 5.5, right? Or maybe as low as 5, depending on where things are that week. And you think it's amortized over 15 years, not 30, so the payment's a lot bigger. But if it's a point and a quarter cheaper,
surely makes sense.
it could make a lot of sense there if you have the money to pay it.
So the takeaway is learn, right? Educate
Right.
yourself.
That's
Talk to an expert. Talk to somebody, because there's a lot of options out there. It's not just a 30-year conventional.
And
There's
things change.
so many.
Things change these days. They change quickly. There's new programs being added every day. And so if you think you can't buy because you're self-employed, you might actually be able to.
Yeah.
Like the DSCR one I mentioned, that's just based on rental income. If you're buying an investment, we won't even look at your income documents. It's just, what is the place going to rent for? Are you putting 20% down? As long as the rent is greater than whatever your payment is, then you're good to go. And some have even lower ratios that allow you to purchase, even if it doesn't cover the whole thing. So,
Lee, where can people find you? You're on Instagram. I know that you do a lot of reels.
Instagram.
Yep.
Yeah, I should start doing some more reels. This is a good step to get me going in the new year.
Yep. What's your
Everybody
handle?
can find you.
It's Lee Bacha at loanDepot.
Okay.
I'll have to,
Good.
We'll have it.
We'll put it
have
on
in
the
we'll
link,
tag it on this. Yeah.
Yeah.
for sure.
See below and smash that like button. Well, thanks for
awesome.
having
Well,
me.
thank
guys.
you so
Oh, it was
much,
great to
Lee.
have you on.
Yeah.
Yeah. And I can vouch for Lee. He's the best. He's really great. You always
Fantastic.
get that clear close like with a week to go. We actually had a nail biter with a pre-approval, and he still got it on the not a pre-approval, a mortgage commitment.
With a commitment,
Came
yeah.
right in.
That's
yeah,
awesome.
Right on time.
because it was late on their side, and but we got it. Yeah.
Yeah.
It's the most important thing. When you're building a team, you want to get to the finish line.
That's
you
right.
need people surrounding you that can get you there, because
Yeah.
there's always going to be bumps. And if you have experts in the field that know how to get over those bumps,
And honestly,
You're golden.
communication is really the key.
Key,
You have to
always.
put everybody on the same page. But if you're having a problem with a loan, anything, you can put the attorney, put the title,
everybody
put
know.
both realtors,
Yeah.
put everybody involved. And so maybe somebody has the answer. Somebody says, you're missing some kind of HOA doc or whatever. Somebody there, if everyone's involved, there's no surprises too.
Yeah.
Right. So
no secrets.
no secrets.
Okay. Well, thank you so much. It was
Yeah.
so great to see you.
Absolutely. Nice
Thank
to see
you.
too.